backwardation worldwide, and what that means is they want their metal, they want it in hand, they want it and they want it now. They're not willing to wait 30 days, 60 days, 90 days. And that's why you're seeing markets that are paper markets are trading below markets that are our physical markets price-wise. And do you believe that that switch in emphasis from paper markets to physical markets is what you've been talking about for a long time? Is this one of the steps that you've been telling people to watch for? And what do you think that how will that affect the price action of gold and silver because of that change? Well, understand that the price action for 30 plus years has been managed, if you will, with paper contracts, with leveraged paper unbacked contracts, and that is ending. So from a price standpoint, I think you're going to see both gold, silver, and other commodities liberated and trade as they would in cash markets, where there's no interference by futures, options, etc. Trying to the in the metals market, trying to suppress, and then it goes the other way around in the paper markets. When I say paper, I'm talking about stocks, bonds, things like that. Those same derivatives have been used to hold the markets up. And I think that the paper influence is waning at this point. The point in time where it's done, that's where you'll see markets crash and gold and silver basically become unobtainable. Well, like I said, the auction on the exchanges are changing because it's moving. They're all moving more toward a delivery. They're all moving more toward a cash and carry market. Music now, comps was not designed as a cash and carry market. You can see the inventories have declined, especially in silver. You can see that with LB May, you could see that with Shanghai, even though Shanghai is basically a cash market. But I've been adamant all along is that the end game, gold and silver, would end up being cash markets, cash and carry, and the futures would be irrelevant. I mean, it's very possible to see gold at $50, 0, 0, 0, or $100, 0, 0, 0 bid and nobody willing to sell, yet Conx has got gold contracts offered at $10 an ounce, but nobody's willing to buy them because there's no gold behind them. So, I mean, that's where we're headed, and that it all ends in what I've talked about for so long, a failure to deliver. Somebody stands for their metal, and that metal doesn't exist. They can't get the metal, and then it's completely game over because confidence will be 100% broken. Understand the dollar itself, the euro, the yen, the pound, they're all fiat currencies, and they all are valued because of confidence. A confidence goes another step further. The reason, and going back to the reason governments don't want gold and silver to go higher, is because that shows a lack of confidence in their currencies, and it makes it more difficult for them to borrow. The suppression scheme on gold and silver really started in 1996 with Robert Rubin Music with what he called the strong dollar policy. And the strong dollar policy basically was dollar good, gold bad. And they were able to, for years and years, they were able to put a collar on gold and silver. That collar is breaking, and as that breaks, so does trust. And you're right, there's so much it's hard to tell what's real and what's not real. I posted the young Korean guy on my website and got about 5 or 6 emails immediately back saying this is AI, and I said, yeah, I know it's AI, music, but his logic is sound. Now, the only thing I've heard him or whatever say that was speculative, and it looks like was not true, was the CFTC meeting at 9:00 this morning, telling people that you can't buy, like the Hunt brothers back in 1980. But his logic on that was, in my opinion, was 100% correct. If the Conx comes out and tries to pull the same they did with the Hunt brothers where you cannot buy, you can only sell, that will be the end of the Conx contracts because that will immediately, people will immediately buy every physical ounce of silver, every physical ounce of gold that they can find. You'll see that bifurcation between paper and gold come to 100% fruition. And silver, gold and silver have been bought and the deficits, the supply deficits have been exposed, not because of Americans. I mean, as a broker this year, we took more sell orders from clients than we had combined in all the years of our careers, or at least I did. I mean, I took tons and tons of sell orders this year. So, North America was a seller, yet the price of gold and silver exploded higher, and the reason being you had central banks from all over the world buying. You've got India importing massive amounts of silver. China's a huge buyer, Russia's a buyer, and mentioning Russia. This whole thing got kicked off when Biden tried to weaponize the dollar to the SWIFT clearing system and confiscate the 300+ billion that Russia had in reserves, and those are still confiscated. And the world looked at that and said, hey, wait a minute, if they can do that, Russia, they can do that to anybody, including me. And that's why you've seen sales of treasuries and purchases of physical metal delivered out to these entities. You can feel it in the air. Now, every market participant with two functioning brain cells can see that we're entering the stage of the game where the paper world and the physical world finally split apart. Backwardation music used to be something you'd see occasionally in a stressed commodities market. Now it's music global, persistent, and loud. Backwardation simply means one thing: people no longer trust the promise of future delivery. Music, they want their metal in hand, not on paper, not in 60 days. Not in 90 days. Now, when the physical market trades above the futures market, that's the market screaming, the emperor has no clothes. That is the cash world exposing the hollow nature of paper promises. For decades, the music entire gold and silver complex has been held underwater by fraudulent leverage, synthetic supply created by algorithms, naked shorting, or unbacked contracts music that never had a molecule of metal sitting behind them. The whole modern Western monetary system has been built on the assumption music that no one would ever actually ask for delivery. That worked brilliantly for 30 years, and now it's failing in real time. We're entering what I've warned about for years, the flip from paper markets to physical markets, from theory to reality, from confidence to panic. And once physical becomes the reference price, the futures markets evaporate into irrelevance. The only price that matters is music, the one someone pays to put real metal in their hand. When investors and nations lose faith in the ability of exchanges to deliver, the entire price structure collapses. Think about it. What happens when physical gold is bid at $50,000 or $100,000 an ounce, and yet COMEX is still showing an offer at $10? Nobody buys the COMEX contract because it's meaningless. There's nothing behind it. You wouldn't buy a plane ticket from an airline that hasn't had a functioning airplane in 10 years. The same thing is happening here. Paper gold and paper silver contracts become worthless the moment the market realizes they cannot deliver metal. Music, and when that day comes, and we are dangerously close, the global financial system, which is built entirely on trust, breaks. Confidence is the real currency of the modern world. Every fiat currency, the dollar, euro, yen, pound, exists solely because people believe the issuing authority will honor its obligations. When confidence goes, everything goes. Music governments know this, which is why they've spent decades suppressing the price of gold and silver. Rising precious metal prices don't just embarrass central banks, they expose the weakness of the currency underneath. This suppression campaign has its roots in the strong dollar policy of Robert Rubin in the mid-1990s, where the directive was essentially dollar good, gold bad. That policy succeeded in tamping down metal prices for years, but only because the West used paper leverage to overwhelm physical demand. That leverage is now hitting the wall. Paper influence is waning. Physical demand is rising. And as that trend accelerates, trust is evaporating right along with it. The Asian video analyst circulating online might be AI generated, but the logic he explains that everything ends with a failure to deliver is absolutely right. If COMEX ever repeats what they did to the Hunt brothers in 1980, switching the rules overnight so that you can only sell and not buy, they'll blow up the entire global future system in one shot. Such a move would cause immediate panic buying of every physical ounce of gold and silver available. That's how you get the final bifurcation. Paper prices collapse into dust while physical metal goes no offer. It would be the ultimate red flag that the system is dead because no market built on trust can survive the public discovery that its core product doesn't exist. What makes this moment extraordinary is that the United States is no longer suppressing gold and silver against weak, music-disorganized opponents. This time, the Western system is being challenged by coordinated, motivated, wealthy sovereign entities. The buyers driving this market are not American retirees or hobbyists. They are central banks. They are sovereign wealth funds. They are industrial giants. They are India and China. Music nations that once struggled economically but are now rich, powerful, and completely fed up with Western financial manipulation. These nations are standing for delivery, music not because they need shiny metal in their vaults for decoration, but because they see the writing on the wall. They know the West is deliberately destroying its own currencies to sustain impossible debt loads. They know weaponizing the dollar against Russia was a historic mistake, and they know the game is ending. 2026, you're going to see an unwind of the credit markets. I think everything is going to unwind in 2026. Do we make it to 250 years to July 4th, 2026? I don't know whether we make it or not. I don't want this thing to come down. Even though life has changed dramatically from the standpoint of the way we grew up is still better than a system that goes down. And a Mad Max scenario where financial markets don't work, you can't get gasoline, you can't get food, that's where we're headed. And that will be caused by credit markets seizing up. Go back to 2007-89. The reasons for that happening still exist, but they're bigger. Nothing was fixed after 2008. Nothing. All they did was double down, and double down. So now there's way more debt. Now there's way more money supply. The balance sheet of the Fed basically blew out tenfold in 2008. Went from 800 billion to 8, 9, 10 trillion. No, it's a progression is what it is. And I guess the best way you could look at it is it's a flame out because the debt gets so large in order to pay that debt. In order to pay the debt service, they have to increase the money supply. And what that does, if you think of the money supply as a pie, the money supply gets bigger, but there's way more slices to that money supply. So each slice is worth less. And that's the purchasing power that shows the purchasing power drops. People look at the music movement this year in gold and silver and say, wow, gold went up. Wow, silver went up. Well, yeah, they do move against each other, but no, music an ounce of silver today is that same ounce of silver back on December 31st. An ounce of gold today, same ounce of gold it was December 31st. The only difference is how many dollars, how many euro, how many yen, how many British pounds, Canadian dollars, whatever you need to purchase that ounce of gold or ounce of silver. And because they've dropped in purchasing power, that's the reason the price of gold is higher and the price of silver is higher. Nothing happened with the ounce of gold or the ounce of silver. What happened is the purchasing power of the fiat currencies basically collapsed this year, right? Well, first off again, understand that gold and silver for years and years have been suppressed with paper prices or with paper contracts being sold to dilute their value. So you're getting some catch-up on that. You're getting catch-up on silver because it comes out of the ground at less than 10 to 1 as far as the mining, but yet it was priced at one point at 120 to 1. Took 120 ounces of silver to buy 1 oz of gold. We're now down to 64. I think on this move you're probably going to see it well under 50. And you very well could see it under music 20, under 30. The historical norm was 16 to 1. And it was discounted to 16 from 10 to 1 because you had to carry 10 times the amount of silver to move the same amount of money. But just understand that gold and silver themselves are money. End of story. The biggest sign that the end game is here is backwardation. The market screaming that people want metal now, not later. This is what happens when trust in future delivery collapses. Think of it like this. For decades, the futures markets acted like a giant buffet line, Everyone took a plate, everyone piled on food, and everyone assumed the kitchen had infinite supplies, but no one ever actually walked back there to check. The moment someone finally opened the kitchen door and discovered there was hardly anything left, boom, panic. That's what backwardation is. It's the stampede that begins when someone says there's no food left in the kitchen, and now everyone wants their metal in hand before the door slams shut. Comics was never designed to be a cash and carry market. It was designed as a hedging platform, not a music physical distribution system. But the world doesn't care what it was designed for. The world cares whether the metal is there. Inventories in both eligible and registered categories have crashed. LBMA liquidity is drying up. Even Shanghai, normally an ocean of physical metal, is tightening. The exchanges are being forced, kicking and screaming, into physical price discovery. Music, and the more this transition accelerates, the more paper becomes irrelevant. Imagine a world where gold is bid at $50,000 or music $100,000 real tradable bids, but comics is still printing a price of $11,000. Nobody will buy the paper price because it's not attached to reality. The comics contract becomes what I've worn for years, a casino chip. It represents nothing. There's no metal behind it. The future's price simply becomes an artifact on a screen. The real world trades metal at whatever someone is willing to pay for the last ounce available, and this is exactly what happens when markets break at the core, the failure to deliver. That's how it ends. Somebody somewhere stands for delivery, maybe a sovereign, maybe a large institution, and the exchange can't produce the metal. Confidence disappears instantly. It's not a slow fade. It's not a gentle decline. It's a cliff. Paper markets only function when everyone agrees not to call the bluff. But now, the bluff is being called everywhere, every month, every delivery cycle. Over 13 consecutive months, we've seen massive deliveries of metal, quantities that simply shouldn't exist if you believe the official numbers. Multiple someones are systematically draining Western vaults. These aren't amateurs. These aren't traders hoping to scalp a few pennies. These are geopolitical actors, industrial titans, sovereign funds, and central banks. This isn't a market rally. It's a coordinated evacuation from a burning building. And yes, it's geopolitical at the core. The US tried to weaponize the dollar against Russia, and it worked for all of 30 seconds. After that, it detonated decades of trust in the Western financial system. Every emerging market central bank said, if we hold our reserves in Western institutions, they can do to us what they did to Moscow. So they began to dump treasuries, accumulate gold, and extract physical silver at a pace never seen before. And unlike 20 years ago, these nations aren't impoverished anymore. They have the financial firepower to take on the West. This is why the narrative that Americans are driving gold and silver is false. North America was selling this year. Retail was asleep. Western institutions were distracted by AI stocks and crypto. Yet metals exploded because Asia and the global South turned the West playbook against itself. They used the artificially low paper price to drain the system. What we're seeing is the breakdown of the confidence loop that has defined global finance since 1971. Once people realize the system cannot deliver, they begin to withdraw from the system. Once the withdrawal begins, the system must print money to stay alive. Once it prints to stay alive, the currency collapses. This is the circular logic of the end of a fiat cycle. It's not ideological. It's mathematical. Music trust evaporates first, liquidity disappears, next delivery failures follow. Music then comes the blow-off top in metals followed by a currency event. After that, the restructuring phase begins. New rules, new systems, new reserves, new alliances. A listener asked recently whether the flood of physical buying and backwardation is the step I've been warning about for years. The answer is yes. This is the step. Backwardation means the market no longer trusts future promises. Delivery demand means the market no longer trusts custodians. Surging premiums mean the market no longer trusts screen prices. And physical shortages mean the market no longer trusts that supply will be available later. When all these conditions emerge at once, as they are right now, you're watching the end of paper leverage and the emergence of real price discovery. As the physical world re-anchors itself, the paper world will crack. Those cracks are already visible. Delayed deliveries, tight supply, unexplained vault movements, metal leaving the system entirely. When the final break comes, it will look very much like the collapse of Bernie Madoff's scheme. When everything was fine, nobody asked for their money. But when one person demanded it, and then another and another, the entire illusion dissolved. The LBMA and COX are no different. They rely on nobody asking for metal, but now everyone is asking all at once. This is why governments fear rising gold and silver prices. Not because of inflation optics, though that's part of it, but because rising metal prices publicly expose the weakness of the currency. Every $10 rise in silver or $100 rise in gold is a neon sign flashing your money is dying. When that signal grows too loud, borrowing becomes harder. Interest rates rise, debt becomes unserviceable, and the system becomes unstable. That's why the suppression campaign was created in the first place. But suppression only works when supply is abundant and the rest of the world plays along. That era is over. Foreign central banks are not only refusing to play along, they're actively breaking the game. India imported record amounts of silver. China refined nearly 70% of the world's output and is now restricting exports starting January 2026. Russia is hoarding metal and selling energy for gold. The Middle East is building metal-backed sovereign wealth structures. Africa is bypassing the dollar and trade, and all of this is happening while the United States expands its debt, prints money to pay interest, and loses geopolitical leverage. This is how empires fall. Not overnight, but one confidence break at a time. In the months ahead, we will see more delivery failures, longer delays, more forced cash settlements, and more vault drains. Music and every one of those events pushes the market further toward physical-only trade. In that world, there is no more paper. There is no more paper gold. The metal is either in your hand or it isn't. People ask whether they should prepare beyond metals, whether farmland, music ammunition, stored food, or barter goods matter. The answer is yes. Gold and silver are money, but they are not the only form of wealth. In extreme scenarios, value is anything someone desperately needs but cannot get. And in a world where credit markets freeze, music supply chain seize, and trust collapses, those needs become obvious. Food, water, music, electricity, security, and the means to trade. This is why I keep telling people the same thing. Prepare for the world as it is becoming, not the world as it was. And now we come to the core warning, 2026. We're headed toward a global credit market failure. Nothing from 2008 was fixed. Everything was amplified. The debt is bigger. The derivatives are more complex. The balance sheets are more grotesque. The money supply is larger. Confidence is weaker. And now, unlike 2008, the West is facing a coordinated bloc of nations determined to break the dollar's monopoly. All the ingredients of a systemic rupture are in place. Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold prize notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today.